Washington.
And despite continued concerns on privacy and harmful content, a key upgrade for Facebook, while Mark Zuckerberg continues his reassurance tour. Tesla is down sharply in the pre-market. Deliveries of new vehicles down 31% in Q1. That's worse than analysts lowered expectations. Company says it's experienced challenges in shipping the Model 3 to Europe and China for the first time. Meantime, Elon Musk does go to Manhattan federal court for a hearing this afternoon. SEC is asking a judge to hold Musk in contempt of court, saying his tweets about production levels violate his settlement agreement with the regulator. Interestingly today, by the way, it's great to have the three of us together at the desk.
Yeah, I mean,
been a few weeks.
Great. Where's that Windex? Do we have the
public service announcement? Get your flu shot. Even when you hear it's only 38% effective, 38%.
You could have gone to Walgreens and given them some business.
Yeah, I could have.
I second that emotion.
You go to the Theranos clinic too, man.
I'm not contagious.
Yeah, okay, that's good.
Back to Tesla. JP Morgan says that the figures, Jim, out of the quarter actually undermined their defense on his commentary on Twitter.
I said to my crew this morning, when I read the JP Morgan, what's with this guy telling the truth? What is that about? But what is this? How can he just go out there and tell the truth? And, my guy said, well, maybe he's honest. I said, how do you like that? That was a devastating piece of research. What's really incredible, too, with Circus Muscumus is that this afternoon, he is going to argue that when he tweeted about the delivery numbers, not material. Well, there is nothing more material, as we see from today. He's also going to say there was nothing new. Well, the fact is that the guide down, it was to 400,000. Now, remember, he said that, I'll be doing a 500,000 run rate. Remember, he clarified that.
10,000 a
week. Right. And now what it turns out is that they are shading it down to 360 to 400,000. But, of course, could they resist? No. 5 times the demand of last year. I mean, could they just, for once, just say, hey, we didn't deliver what we could? I mean, imagine Ford Motor sitting there and saying, hey, guys, we did substantially fewer cars, but let's just say there's pent-up demand. I mean, that guy Shanks, who's the CFO, I think he would say, I'm resigning. I'm not going to do it. I'm resigning.
But what? But this is Elon Musk, and we know one of his great strengths
is Elon, what is that?
As promotion
is he Belichick? He's not Belichick.
No, he's not Belichick. He has not won Super Bowls yet.
How many rings does Musk have?
I don't know what you count as a ring.
Well,
got a number of companies.
Now, of course, right now the Bulls are saying, doesn't Kramer know that he's produced more cars than any man, and the cars are fabulous? Don't you know that he's not going to focus on the quarter? Jamie Dimon says don't focus on the quarter. Suddenly you're focused on the quarter. Well, the answer is I'm focused on the quarter and deliveries to see the stock's down 30 points on a missed delivery. Now, the Bulls say ignore that. That's equal to up 30.
We've talked so often about how much emotion there is on both sides of this and how dug in everybody is. You have endlessly.
I know.
And you see it whenever we talk about it in any way or the other, whether it is negatively or positively, each side comes at you. I would offer that it's not just the 3, but it's actually the more profitable models that may be more of a concern, because the fall off in the X, the fall in the SX as well.
Yes, yes.
And the X, the S and the X, excuse me, are significant, and that's where a lot of the margin is at this point, given how low they brought the price down on the 3.
So right, because what's happened is that at the beginning of a run, you're not, it's the yield, they're not making as much money. I mean, it's obvious that they have demand still in Europe and China, but doesn't that tell you that demand in the U.S. may have softened?
Well, I think that's Bernstein today says the S and the X, as David points out, down 50% sequentially. Yes. They don't know whether this is model fatigue, fading tax credits, competitive models.
Competitive models. I mean, Porsche's coming, Jaguar's out. You've got a number of significant high-end competitors.
No, look, I think that this is the first time that you have a question about whether there is real competition. The competition is from very high-end cars that people think are made well.
Audi makes a pretty good car.
Yes, they do.
I've driven them for
BMW.
years.
I was in a BMW electric. It was fantastic. It was fantastic.
Bernstein's other note this morning is that they should have raised money in the second half.
Oh, they had a chance.
And now, with undermined credibility, it's going to be a lot harder to access capital. You think that's true?
Yeah, I do. I mean, right now, look, you go to Goldman Sachs. Remember, Goldman did a deal. I mean, this Goldman piece this morning, broadly disappoint reiterate sell. I mean, if I were, this is one of those
Well,
moments.
they've been on a sell.
But at this point, this one's so bad that I would tell investment banking, don't do the deal. I would go over to investment banking and I would say, guys, I don't want you to do this deal.
You're not allowed to do that.
No. If you think that there is something that is like, that the books aren't right,
I see.
they have the right to be able to say, I don't think you should do this deal.
Right. I think maybe you go to a third party who tells them. You go up to go to that.
Whatever they have to do. I don't want to violate the Chinese wall, but there are moments where it's like, if there's the research is saying that you can't buy it, like this is you can't buy it, then if you buy those bonds and they go down, I think I could sue Goldman and say, hey, listen, your own firm said can't buy it.
To the point being made and that Carl's mentioned, it's going to be a lot more difficult for them to raise capital in any form than it would have been, at least at this point. Not to mention they used up a lot of that cash for that convertible, remember, earlier this year when
the payment they did make.
I'm not disagreeing with David at all.
All right, Eric Muathe, Muathe.com. There we have it, some of the financial media discussion as far as Tesla being down in the pre-market. So that's their take. Let's take a look at the take from a long-term monthly chart view to see what this drop might mean in terms of the possibility of the continuation, or let's say in terms of what could be the next meaningful direction after this gap down this morning. And one thing we can see on the long-term monthly chart, something I've mentioned before, is Tesla has settled into this type of very volatile price action going back to 2017. So this drop is honestly nothing new. It's just the way it's been trading for a couple of years. This big drops and big moves to the upside. So in this type of a market frame, you can see it's very hard to predict where things are shaping up to go. Very tough to predict. And the other thing is you can see here that in terms of the RSI, we are very close to moving to 3-year highs. Now remember, this is before the open, so I don't have the price reflecting the gap down, but the RSI is just about to move to 3-year lows. And also we'll notice here that the MACDs are also just about to move to 3-year lows. So what I'm going to do here is pause this video and I'll be back after the market opens so we can see what the charts look like. All right, market's just about to open. There's the bell. All right, we'll take a look at where Tesla is trading, and then we'll take a look at the charts one more time. All right, live trading, Tesla down about 10%. Let's take a look at those monthly charts after the market is now open. And as I was saying, the risk here is we are now seeing with this drop, the probability that this drops and slips to 3-year lows, which is one of our sell signal requirements. We can see one of the MACDs is also just about, if not. So we can say the MACD is already trading at 3-year lows, which is a major red flag. So I'll give you two numbers to watch here based on the recent monthly closing lows. We can take this monthly closing low here as a level to watch, or this monthly closing low here as the other level to watch. And those numbers are 266.13, which goes back to this close there on a monthly basis from 2018, or 264.77, which is this close here. So we can say that anything below this in a price level, so breaking down below either of these prices, is suggesting that Tesla could be breaking down below this range. Now keep in mind, it's been a very volatile last couple of years, so bouncing back above these numbers is not out of the realm of possibility. But what I can say is, as long as we continue breaking and trading below these two numbers with this drop, chances are this can actually be a major, break in terms of short-term, month-to-month, multi-month direction as far as Tesla is concerned. Also, another observation here is if you take a look at all data for Tesla on a monthly chart, so all data monthly, we can see the risk is breaking below to fresh all-time lows in terms of the RSI is a major red flag. If this RSI goes on to trade to 3-year lows, goes on to trade to all-time lows, that's a major red flag. And also we can see that one of the MACDs is already trading at all-time lows. So the issue here is anything moving and staying and keeping Tesla's MACDs at all-time lows is a major red flag. And also keep in mind that if the MACD would drop below 0, that would not be a good sign. So the risk is there. Watch those two numbers in terms of the 2018 monthly closing lows. 26613 and 26477 are the numbers to watch. Anything below that would be a major sell signal. If and when it can recapture those two price levels, then we can say that it is repairing the current damage. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. ESS. Mwah.